Hello traders, Gary Wagner here. Just about 8:30 in Honolulu, 2:30 in New York. It is Monday, 13th day of August, 2018, and this is a special edition of the Gold Forecast, our daily report, and what a day we're witnessing. Gold breaking below $1,200 per ounce, currently trading near the lows, down $19.50 at $11.9950. Of course, we are short from 12.17. So today alone, we have racked up some nice profits. We'll talk about the trade as well as our next set of strategies now that we've hit our initial target at 1200. Spot gold also under pressure, down at 11.92. Although it's only off about $18 on the day. And then silver, a tremendous hit, almost 30 cents at $15 per ounce. Now that's all in light of a fractionally higher to a fractionally lower dollar. The dollar index is not really the major impetus in what we're seeing today. It is pure selling in the market. Now, in terms of the equities, we are under pressure, but only slightly. Dow Jones Industrial Average down about 52 points at 25,258. Standard & Poor's trading lower on the day, down almost 3 points at 2830. And then lastly, the NASDAQ Composite, that is actually trading higher on the day, up 8 points at 7847. Traders, assuming that we do not see gold prices recover at any time during the week and stay in this area, we can now take a look at a period of time consisting of roughly 10 weeks in trading, and during that 10 weeks there has only been one weekly candle that was green, very small but green nonetheless. For the last 6 weeks we have had consistently lower prices, and each lower price is setting a new record for 2018 because, of course, 2018 at the beginning, gold was trading just at around $1,300 per ounce. That was for the first couple of months. Once it broke through that area, it did break hard. Traders, we currently have a trade on. We are short either at 12.1760 or substantially higher. If you took that call when I sent out my outlook for gold immediately following the conclusion of this month's FOMC meeting, nonetheless, all traders have profits, and I did send out a trade recommendation looking to move our stop just above 1208 on a protective stop. And the reason for that is I am trying to keep it fairly tight. If we take a look at this chart here that I've just pulled up, it is a 1 hour candlestick chart. We can see the break that just came in, and it was during a period of time in which it hit this low at about 1202 and then popped back to just around 1210 and then settled roughly at 1208 before moving lower. That gives me a reason to believe that this particular price point should be an area of resistance right now and not an area of support. Gold continues to hover just above $1,200 per ounce, and realize this is the December contract, because when we move over into spot, what you can see is we're trading well below 1,200 right now. In actuality, physical gold is currently at 1,193, which takes us to our current strategy as well as our current targets and what I'm looking to do. When we look at our daily chart, we can clearly see that the break below 1215 was a major and significant break in terms of a technical basis, because that is the 0.618% retracement. We can also see it attempted to form a base just below that, but went into utter meltdown today, trading, as I said, to these new lows and currently at 1193 in physical gold. And traders, the numbers change ever so slightly when we look at gold futures. This being the December contract, we can see that it formed a base just above 1218. We got this hard break today, and as I said, a solid break below 1200 on a closing basis to me would indicate lower pricing and a revised target. As you know, for the last month and a half, I've been talking about 1200 as being a very achievable price. Well, we certainly saw that actualized today. My sense is, and this would be based upon a solid close below 1200, whether it's today or tomorrow. In other words, not returning to rally mode. My new target of 1178, and that of course is the 78% retracement. Below that is this low that came in the end of 2016, which occurs at $1,120. So those are the two areas that I would look at, specifically 1178 as our next realistic target. Secondly, if we get this hard break, my recommendation is that we might want to consider adding to our current short position. And the way I recommend you scale additional positions on is you do what's called a reverse pyramid. Simply put, a reverse pyramid starts with the largest amount of positions as your first entry point. So traders, if you put on 4 contracts, your next entry would be with 3, then with 2, and then with 1. The reason you do a reverse pyramid is that you'll always end up with your best price with the largest number of contracts. So traders, maintain your current short position at 1217.60 or higher. Maintain the stop that we just moved, which is just above 1208, and look for a break below $1,200. That would indicate it is time to scale and add yet another position. If we do that, our revised target will be 1178. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.